Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. Today we're talking about an unexpected outcome from the FIFA World Cup, one that contains an important lesson for every real estate investor. Many short-term rental owners expected the World Cup to be once-in-a-generation windfall. The assumption seemed obvious. Millions of fans would travel to host cities. Hotels would sell out, short-term rentals would be scarce, and the nightly rates would soar. But that's not what happened. Across several host cities, property owners are reporting that demand has fallen short of expectations. In some markets, hotel occupancy is lower than anticipated, and short-term rental operators are aggressively reducing rates to fill vacant nights. So the question is why? The answer comes down to a very simple principle that every investor should understand under all circumstances. Price is not determined by demand. It's determined by the relationship between supply and demand. So what happened in the World Cup markets is a textbook example of supply responding faster than demand. So let's look at some numbers. In Vancouver and Toronto, Airbnb reported roughly 4,000 new hosts entered the market after the World Cup excitement began building. Many of these were homeowners who had never operated a short-term rental before. They saw projections of extraordinary demand and decided to participate. Now, some of these communities have restrictions on short-term rentals. According to the data released as the tournament approached, approximately 70% of Vancouver listings and 80% of Toronto listings remained available despite the event being only weeks away. I mean, think about that for a moment. If the market were genuinely undersupplied, inventory would be disappearing. Instead, most of the inventory was still sitting vacant. And this is not a shortage. There's excess supply. The same pattern emerged in several U.S. host cities. In Dallas-Fort Worth, for example, one of the largest markets, AirDNA data shows available short-term rental inventory increasing substantially year over year as both investors and homeowners attempted to position themselves for World Cup demand. In Miami, operators who initially listed properties at 3 to 5 times the normal seasonal rates were forced to reduce prices after bookings failed to materialize. In Atlanta, another host city, many owners blocked calendars for months in advance, expecting premium bookings, only to find themselves lowering minimum stay requirements and reducing rates as the event approached. So what happened? Everyone was looking at the same headlines. Millions of visitors are coming, but they failed to ask a second question. How many suppliers are responding to that same information? It's one of the fundamental differences between short-term rentals and hotels. If a city needs an additional 5,000 hotel rooms, it might take years to build them. Hotels require land, permits, financing, construction, staffing, operations. Supply is slow to respond, but short-term rentals can appear almost overnight. A spare bedroom becomes inventory. A basement apartment could become inventory. A second home could become inventory. An investor postpones a sale and lists the property instead. Supply can expand within weeks, and that's exactly what happened. The low barrier to entry created a rapid increase in available inventory, and in many cases, supply grew faster than demand. So let's talk about pricing. Many hosts expected to charge extraordinary rates. Some listings appeared at 10 times their normal nightly pricing. And the problem is that travelers still have budgets. A World Cup fan isn't only paying for accommodations. They're paying for airfare, tickets, food, transportation, and entertainment. And when ticket prices consume a larger portion of the travel budget than expected, something has to give. Often that means spending less on accommodations, shortening the overall stay. Many travelers simply waited, expecting prices to fall, and they were right. As occupancy remained weak, hosts began reducing rates. Hotels started discounting, and short-term rental operators lowered prices. The market adjusted. That's a classic example of price elasticity of demand. The assumption was that demand would be unlimited, and the reality was very different. Many investors expected reservations 6 months in advance, but soccer fans don't always book that way. Many wanted to know which teams would advance. Others waited until tickets were secured. Some wanted to see if prices would decline. So the booking patterns became much more compressed than many operators anticipated. That's created panic among owners who were staring at empty calendars. So let's step back and look at the broader investing lesson. The World Cup itself isn't the story. The story is investor behavior. Whenever there's a widely publicized opportunity, capital rushes towards it. We saw that with self-storage. We've seen it in multifamily. We've seen it even in industrial. We're seeing it repeatedly with short-term rentals. Inventories hear about extraordinary returns and immediately assume demand is going to remain stronger than supply. But markets are adaptive. When profit opportunities appear, new competitors appear, and The more accessible the business model, the lower the barrier to entry, the faster that new supply arrives. That's why I continually encourage investors to focus on barriers to entry. A market with strong demand and high barriers to entry can support long-term profitability. A market with strong demand but almost no barrier to entry often experiences rapid oversupply, and the World Cup has demonstrated that in real time. So for investors, the takeaway is straightforward. Do not underwrite a property based on short-term events. It should never be the primary reason for the investment. Property would have a viable business case over the long term, and if the numbers only work because of a short-term few weeks a year, then you're depending on speculation rather than fundamentals. Our job is to understand supply, demand, and identify where the balance between the two creates durable value. And the World Cup offers a fascinating short-term case study, not because demand failed to arrive, but because the supply arrived faster. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.